Good evening, family. Welcome back. Tuesday night, May 14th. Wanted to go over a specific video and concept that I have to give a shout out to Will, Electric Buddha, for talking about, I think, a few weeks ago about laddering, laddering with a D, two Ds. And it's going to be very similar, at least in concept and theory, to my penny stock videos if you have or have not seen them before. Recommend maybe even diving into those first to give some kind of background. If not, no big deal. We will go forward with this. And the reason I'm doing it this way is because I'm looking to manage expectations, maybe at least in the initial setting, and also get us prepared for being active investors during a bull run rather than waiting for the long term for these assets to go through the roof, seemingly. This is even gearing towards what I would call a single digit bull run. Let's say that it never gets to $10, the assets that we have on hand. And I know a lot of people over the past couple of years, as we're getting into this play or any other play, saying, oh, what, $15, $20? Why is it only going to go that high? Well, I'm going to even drop it down even further and go below 10. And each step of the way, I'm going to show you what you can do with just 1,000 XRP in your portfolio. I'm going to give a shout out to Mamacita for actually having the courage to talk about your portfolio only and what you're going through. So major props for that. So this video is for you and anybody else who may not have a lot of assets currently because of the financial situation that we're in. So let me go over the outline of what a single digit bull run would look like with the assets that we hold. I'm going to go into portfolio and budgeting, and that's a current portrait of Middle America. As I've told people before, I help people with their finances on a nightly basis, and I see these portfolios and I see these budgets on a nightly basis that I help these people with. And this is about as Middle America as we're going to get on that. So if you are in this situation, no big deal. Educate yourself on how to get out of it. That is the key to getting to the next step. And I'm going to use a 25% laddering technique. And when I talk about laddering, and when Electric Buddha and Will talks about laddering, you could move this money and these tokens by taking 25% of your assets. You could do it by taking 25% of your dollars, fiat, or even both. I'm going to recommend laddering 25% of your assets and not doing that with fiat. Use the fiat to roll it and snowball it into the next play, 100% of it. If you've seen my inflation videos, you'll know right off the bat that the fiat is a dwindling asset on a daily basis. It is not getting more valuable the longer that you hold it. So it's better to hold on to your assets, only slice and ladder 25% of them while rolling all of the fiat into the next play. And I'll show you why as we do the numbers. And then I'm going to show a before and after. What I'm going to do is in that first bullet point, show you what Middle America looks like now. At the end, I'm going to show you that same Middle America and then what your portfolio and budget could look like after you do this laddering technique that I'm going to go through. So away we go. Let's look at John or Jane Q. Public with their portfolio and budget. And if this is you, no big deal. We've all been there. Some of us still are. Some of us maybe even less so. Struggling because the things that we're trying to buy get more expensive. But if you have a job, that means you're bringing in income. And let's just say gross, you're bringing in $4,000 per month, right? Average salary, maybe a little above, maybe a little below, depending on what we're looking at depends on what city you're in, depends on if you're in the country, depends on if you have a low standard of living, cost of living. There's a lot of factors that go into this, but we'll use 4,000 a month, which is 48,000 a year as kind of our basis. Now you're probably paying rent. You're probably got debt as well, and rented for $1,000. That's probably on the cheap end. But you've got, debt that you're juggling, student loans, maybe, household items, whether it's food, groceries, any other household items that you need to take care of your house on a monthly basis. If you're lucky, you don't have a car payment or you're using premium gas like I am, because that keeps going up. That doesn't seem to be going down under any circumstance. Insurance, everybody's insured out the ass for all sorts of things. And then obviously you're going to pay taxes. And then maybe after coming home after a long week, you're too tired even at the end of the week. So you just use your weekends for your entertainment. If you can squeeze out $50 a month to just enjoy the money that you do have, that's a possibility. When you add this up and you subtract it from your income on a monthly basis, you may have like $300 left over. And in your portfolio, all you've got is 1,000 XRP. And at about 50 cents roughly with the coin trading, you've got $500 socked away. You're trying to use some of that leftover money to put more in. I would recommend doing so. But that's pretty much what it looks like on a monthly basis, middle income America. And the struggle is real in a lot of ways. So, laddering technique, as I mentioned, I'm going to go into my OneNote to go into that to kind of show you on almost like a whiteboard level what this would look like. But remember, the 25% that you're splitting, you're going to split 25 and 75 of your assets, not of the fiat. You want to put 100% of the fiat into these plays as you keep rolling them over, snowballing down. Separate the coins by 25% and 75%. I'm going to show and draw what that looks like. Hang tight. Dun, 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 dun. And what I'm going to show you is a single digit bull run. And I'm going to use a formula, one that I've often used with a lot of different things that I do in business, a lot of things I do with marketing, a lot of things I do if I'm looking to hire somebody as well. And it's called 8532. And 8532 is a formula that I'll use. Let's say I'm looking to hire somebody and I want, two good candidates to come out of this. I will network somehow to get 8 resumes on my desk. 5 of them will receive a phone call from me because the other 3 may not be qualified. Out of those 5 phone calls, I'll get 3 interviews. And out of those 3 interviews, I may get 2 candidates where I get to pick one or the other for the best person to bring on as an associate. So kind of a marketing thing too. If I'm going out, indeed for clients or if I'm on appointments, if I'm on appointments 8 during a week, 5 of them I'll end up doing a financial plan for because 3 won't want it. Out of those 5, I may end up closing business with 3. Out of those 3, 2 left over. 1 could be an annuity client. The other one could be an investment client. The other one could be a debt consolidation client. It just depends on where they are financially and what needs that they would have at that time. But 8532 is something that I use mentally as I'm managing the business on a week-to-week basis, month-to-month basis, and definitely a day-to-day basis. So I'm going to apply the same formula here for our beloved crypto assets that we're investing in. I'm going to use the big 4 that we normally use, which is XRP, cross-border payments, XLM, peer-to-peer transactions, XDC for the derivatives market, and HBAR. It's just too weird to even know where it's going, but HBAR is one I really believe in. I think has a definite future long-term, and it's probably my second biggest holding, but I'll keep it at the bottom just to say that in a single-digit bull run, we expect all our stuffs to go to the moon. I get it, but let's just say our coins and our tokens only go to this 8532 level. 8 for XRP, 5 for XLM, 3 for XDC, and 2 for HBAR. What would that look like as we're laddering our assets? Well, remember, we only have, as I do this, for XRP, we only have 1,000. So when we ladder it, 25% and 75%, 75% of that is for later. So you have 750 of them. Don't worry about that right now. That's for later. And then 25% is for now. This is what we're going to use to play with. If you're a poker player, these are the chips that you have at your table that you go to battle with. All right. And let's ladder this up. 8532. So if we're going to go to 8 for XRP, this is what we're going to play with, the 25%. And when you cash that out, what does that look like? That is a very even $2,000 fiat. Remember what I said, use all of the fiat to roll it into the next one, which is XLM, which is at about 11 cents. XLM. So what does $2,000 divided by 11 cents, that is 11 cents, of XLM, that basically gives you 18,181 XLM. Remember, ladder it 75% for later, 25% for now. And as we go down here, that basically looks like 13,636 for later, and then 4,545 for now. And then XLM, you're going to run up to that 5 part of the 8532. The beauty of this is, as you're noticing this, is that every time you accumulate more assets, you don't have to go nearly as high as the first one that went up there. And that's another reason why I'm using 8532 as we're actually going through this. So what happens when you multiply 45 of your XLM and cash out at that $5 mark? You're looking at $22,727. And remember, we're going to, at the end of the day, use 100% of the fiat and not ladder that at all. We're only going to ladder the assets because the fiat is going to be worth less and less as we go on. Now, the next one you're going to roll it into is XDC. Right now, XDC is at 0.34 cents or 0.036 cents or somewhere along those lines. So when you shove all of that $22,000 into XDC, you end up with 668,449 XDC. Derivatives market coin, quadrillion-dollar market. Ladder this one again. 75% of that for later. You don't want to do anything with that now. That will give you 501,336 for later. And then 25% for now that you're going to play with. It's 167,112. 8532. So let's just run XDC in this bull run, this single digit bull run, up to 3. What are you left with? Well, 167,112 times $3. You're cashing out now at $501,336. A lot of money. And a lot of money that is deteriorating in value by the second. So that's why I'm telling you, put all of that as you can into the next run as you're moving these over. Because remember, that 75% for later is also going up in value as you keep laddering off that 25% to play with. You're keeping 75% on the back end. So you want to look at that and don't look at this and say, oh my God, what do I do? Lambo time. No, use this as your battle pawns. These are the ones that are going to work for you because you're going to bump it into the next asset class, which is H-bar. H-bar is trading, I think the last time I saw it was about 11 cents, 11.2 cents. And what happens when you dump $500,000 into H-bar? Good things happen. You're ending up with 4,476,222 H-bar. Ladder, again, 75% for later. That gives you 3,357,166. 25% for now. 1 million. Nope, that's not a dollar. 1,119,055. Now, if you've seen what we've done, 8532, the single digit bull run, the one that everybody's depressed on because the prices aren't going to 18 digits in fiat, that's going to be worthless anyway by the time it does. Look what you can do with just a single digit bull run. End up accumulating 1.1 million H-bar. What happens if H bar goes up to the lowest one on the rung, which is 2, 8532, right? What are you looking at? You're looking at 2,238,111 dollars. All right, you want to put it into an asset at this point, and I'm going to go into something a little bit different if you've invested in this or not. I'm still going to go over into it because this is what I deal with clients, and these are investments that I get clients into as well. Now, for disclaimer purposes, yes, I'm a licensed investment advisor, but I am not recommending or offering a prospectus to purchase this security. Disclaimer, I'm just doing this for education purposes of what could be done and what could be put in and how it could be managed. So you got $2 million that you're looking to put into some kind of asset. All right. And this is one of many investment products, but I'm going to go over, if you've never invested in one of these, municipal bond fund. Traditionally, and even today, even in traditional finance, TradFi, I still consider municipal bonds kind of the Rolls Royce of the investment world. They are income tax free at the federal level. And the way it would work is sometimes states do still tax municipal bonds. I am not a CPA. I do not give tax advice. Please see your CPA for tax advice. But if, let's say, you're going to drop something in to give you at least recurring income, here's how it would work. You've got your 2.238 million, and municipal bond funds have what's called a net asset value. That is similar to a share price of a stock, even though it is much different. But let's just say, for argument's sake, that you drop it into a municipal bond fund and the share price is $4 per share, let's say. All right. So what you would do is, let me get out my Puerto Rican calculator. I am part Puerto Rican. That's why I keep saying that. I used to laugh when Lou used to say that because he's 100%. I'm only 25%. So my Puerto Rican friends make fun of me and they call me a Puerto Rican because of it. So my Puerto Rican calculator tells me that you have about 559,000 shares. 559,527 shares of a municipal bond fund. Now, sometimes that goes up. It's not very volatile. It might go up to $4.11. It might drop to $3.90. What you're not going to see with municipal bond funds are swings into the $8, $9 range and drops into the $1 and $2 range. Relatively stable, designed to give, in a lot of ways, tax-free income. That's the way I would look at it. However, going from this stage of it, what you're usually earning on a municipal bond fund is at the low end about 1.75%, and on the high end about 3.5%, depending on the fund. So I usually go to the middle, which is about 2.5%. And here's how it would work. If you've got $2 million in there, $2.2 million in there, at the end of the day, or the end of the year, let's say, 2,238,111 times 1.025, because 1 is the 2 million that you have already. The 0.025 is the percentage in income that you're going to earn. That's going to give you the of the year. It'll pretty much $952 in income for the year. And if you divide that by 12 to see what that looks like on a monthly basis, $4,662. So this is what you skim off the top at the end of the year on a monthly basis if you want. If you want to skim it every 2 weeks, if you want to skim it every 6 weeks. On average, if you're averaging about 2.5, this stays put. This is the principle. It doesn't go anywhere. So in year 1, you get that. In year 2, if you're earning 2.5%, it just repeats. The 2.238 anywhere. That's what you're using to actually earn the off the top. And each year you get that, or you can set yourself up to get one payment per month, two payments per month. You get paid, pay yourself weekly, whatever the case may be. This is your money. Those are your shares. You just liquidate the shares in enough that would give you whatever income that you're actually looking for. But if you're aiming for that and you're thinking that, okay, 55,000, remember that 55,000 at the end of the year, or that 4,600 at the end of each month that you're getting is income tax free at the federal level. So that's just one example of what you could do by laddering 25% and then taking it through all these 4 coins on a single digit bull run. You do not have to wait for prices of $55, $65, $75 for each token that you're looking at. So what I'm going to do is I'm going to revert back to the PowerPoint slide after looking at this, and keep these numbers in mind. Keep the 8532 in mind as well, and what that would look like there, because we're going to see what your before and after picture looks like by laddering each of them and saving that 75% for later. Away we go. All right, showed you the laddering technique. If you have any questions, you can email me. I'll leave my email in the description. So before and after, 8532, what does your life look like before with your income, with your job? Same thing, your rent, your debt, your household, everything that you have to pay. If you're lucky, you have $300 left at the end of the month. But you did decide to take a chance and throw money into a digital asset that is the future of banking cross-border payments. Lucky you. Then you followed the 25% laddering technique with those top 4 coins, all dealing with money exchange and transfer. And here's what that looks like now. Now you're generating $46.62 a month in revenue from your municipal bond fund. Now, looking at that right there, you're already in a better shape than your job is. You know, your rent is still there. Maybe you've used some of the money, or maybe use some of the other assets that you have to pay off all your debt. So now you're not carrying that $750 a month anymore. Your lifestyle is still the same. Go through it. You're not paying taxes anymore either. You've got a municipal bond fund that is income tax free at the federal level. And when you take the revenue that you're bringing in, $4,600 a month, subtract all those numbers in pink on the right side, now what you have left over is over $2,000 a month. Right off the bat, if nothing else happened, and that's all you did with your XRP to make that happen, as you're looking at left side and right side, would you think that you improved your lifestyle just by that alone? You know, if you're looking at left side, right side, which side would you want to be on? Even better is, remember the 75% that we laddered away for later. Now you have built your own portfolio. Yeah, you only have 750 XRP left, but at $8 a token, it's about $6,000 in fiat of what you're looking at now. We laddered our XLM away, and at the $5 price that we took it to, not too bad as well. XDC, we still had 500,000 of those left at $3. That's 1.5 million in a portfolio. And then HBAR, the granddaddy of granddaddies, because we ended up laddering 1.1 million of those and turning that into our municipal bond revenue. But the rest of that HBAR that was left over, the 3.3 million, at even just $2, is giving you a portfolio amount of 6.7 million in your of fiat anyway in your portfolio. Now, I make fun of fiat, and I will continue to do so if you haven't seen my inflation videos. But I'd have to say, I think we could struggle by. I think you'd be okay even with 6.7 million of them, even in today's inflationary environment. Who knows about tomorrow? Who knows about next year? But looking at the left side, right side, I think, it's safe to say which side you'd want to be on. And look at that leftover you have on the right side, the over 2,000. Feasibly, you could take some of that and add it to that rent number, let's say $500 or $600, and maybe even upgrade your living area. Maybe you're not maybe $1,000 a month isn't paying for what you would like now, and you'd like to move into a better place, maybe for you and your family, maybe extra bedrooms for your children, who knows? But feasibly, you could take some of that left over there and roll it into the rent and upgrade your living space if you'd like to. Now you could probably, even looking at this, you could probably keep both your job and the municipal bond revenue coming in, and do that for a year, do that for 6 months, do that for 9 months. And I say that because your income from your job and your revenue from your municipal bond, that's giving you over 8,000 a month, 8,600 a month, to be honest, Over a year, that is $100,000. If you ever wanted to know what living a lifestyle of $100,000 per year is, you're looking at a path to go there, and you don't even have to wait for high numbers on the bull run that's coming. Or just keep your job for a couple months, or keep both of them coming in so you can take care of some things with the leftover money or your revenue from your uni coming in. You can actually take care of maybe some things that you never had a chance to purchase. Are you purchasing precious metals, hard metals, silver and gold? Do you have your firearms set up? Have you bought food at a lower price, which it is now, because it probably won't be at a lower price 9, 12, 15 months from now. So thinking of those things where you're trying to set up yourself to take care of your family, this is a good way to do it. And also, it's a spare tire too, that right side, in case you do lose your job. I don't think the economy is getting better. I don't think people are rushing out going to be hiring people in droves over the next 9, 12, 15 months. This idea of stagflation, I may even do a video on stagflation, is very real. It's very detrimental and damaging to middle class Americans, or middle class anybody, to be honest with you. But look at the options that you have now, looking at left side, right side, and where that could end up. Now, the other fear of this, and I always encourage people not to live under the dynamic of fear, because you look at that portfolio on the right side and you're like, my God, I got to cash out, got to get that money. Oh, that's a lot of money. And it is. I get it. I agree. Stop thinking in fiat and stop thinking that way, and start thinking in asset building for the future tech that we're going to be using in our day-to-day life that we just can't see now. What happens if this is the top line, 8532, and then it crashes and then it goes all the way back to whatever? Let's say it goes back to the previous all-time highs for XRP, XLM, XDC, and HBAR. And I'll show you a before and after of what that would look like if you just decide you've set up yourself on your municipal bond with your revenue. You've set up yourself in your portfolio. What happens if I don't cash out now and it drops back down? Stop acting in fear. Look at these assets of things that you want to build upon, because 8532 may turn into 3.79, 0.17, and 0.43, which is the previous all-time highs of XRP, XLM, XDC, and HBAR. All right, so what if you hold on, don't sell anything, and keep it in your portfolio, and then it crashes back somewhere in the bull run, with all the volatility going on, it crashes back to the previous all-time highs. Look what I could have cashed out at. We still have that kind of AMC GME mentality sometimes. Well, here's what that would look like. You still had your before of your job with your $300 left over. Your portfolio was still 1,000 XRP. Now, even though it crashed back, you still set yourself up by laddering with the municipal bond fund giving you that revenue per month. So if nothing else and you lose your job, you're still in a better spot on the right side, even if it does crash back, because this is what your portfolio would look like if it crashes back to the previous all-time highs. And I use that because during bull runs, there are support levels that are challenged and are maintained. And let's just say the previous all-time high is that support level for these four coins. $3.38 for XRP, 79 cents for XLM, 17 cents for XDC, 43 cents for HBAR. It's kind of irrelevant, I say, the price, because the key was making sure you secured those assets. Because even if you look at the left side and right side on a crypto crash back to its previous all-time highs, are you still in much better shape on the right side than you were on the left side before this happened? Does this look like a good backup plan that you could actually implement? I'm encouraging at this stage not to live in fear, but also to take an active approach into the upcoming bull run that's about to happen, and set that plan up in case, and to kind of summarize what a single digit bull run would look like if you're going to do that. The laddering at 25%, as I used here, is a guideline. I always say plan your numbers and do the math. If you want to use 10% instead, 15%, 40%, maybe you want to use 65%. I'm not here to tell you what number to use. I'm just showing you how to do it. And then you make your plan with whatever numbers fit your lifestyle and your family accordingly. And I want you to think in terms of accumulating assets and making sure that you're setting up a portfolio and not holding on for more fiat or wish you cashed out at higher fiat that again is just going to be worthless anyway. If you haven't seen my inflation videos, I highly recommend watching both of them to show you what fiat looks like over the long term. These four coins, not going to be in that inflationary environment long term. Those are assets that are only going to grow in price and value to the point where it's more important to hold on to those assets than it is to exchange it for fiat that's going to buy you less and less and less and less. And really, what you're trying to do is prepare yourself for the next bear run. I love bear runs and bear markets because I get to accumulate more. You've set up your portfolio as a base level. You saw that before and after picture. Use that as, okay, this just crashed back to this number, but I saw it go up to 8532. I want to buy more at this price. I want to use that leftover $2,000 that I have now on my new municipal bond revenue to start purchasing more of these assets and make a percentage budget each month to dump it back into them. That's the key here that you want to focus on. And like I said, move tokens to build your portfolio and then prepare for the next bear market, whenever that may be. I always say look at the Ethereum market in a lot of ways and look at Ethereum in 2018, 2019 prices, then look to see what it did from April 2020 to November 2021, and then look at Ethereum in 2022. It did not crash back to those 2018 and 19 prices. It's very possible that our own tokens for moving money across the world aren't going to either. But if it does, again, even if it crashes back all the way back to those previous all-time highs as a support level, you're still in better shape before and after. Even if it crashes back to today's prices, who cares? Nothing lost, nothing gained. You've just freed yourself from a job. You have more money at the end of the month, and now you can plan better to actually get some of these assets moving into your portfolio to start working for you. There will be a day and a time when this comes. I'm just showing you kind of the art of what's possible before we even get there. So, family, it's been a pleasure. I'm going to keep putting out videos like this and akin to this. I'm even going to put out a video kind of talking about the future of this channel and what it's designed to accomplish as we move through these ever murky waters going forward. Good luck, best wishes, giant hugs.